Good morning, everyone. This is Tarun Satsangi from Origo eMandi Research. Last time we talked about mustard. In today's session, we will have a discussion on soy. We will talk about Soycomplex demand supply price trend analysis, DSPTA report. Let's have a quick overview of the domestic market. Soybean indoor prices gained 1.2% last week after gaining 4.4% in December. Talking of soy oil, it also had a catch-up rally, gained by 2.1% last week after falling 1.2% last month. Arrivals in domestic market have dropped because farmers are now expecting higher price to come. That's why they are holding their stocks with them. Soybean international market, especially in the CBOT, it is now at a 4.5 months high, and we believe this party will continue. Let's have a quick review on the international scenario. Soybean CBOT March future prices have boiled to 4.5 months high of 14 dollar per bushel last week on account of first, likely lower Brazilian soybean production, which is caused by drought that in turn has upped the concern of drop in the global oilseed output and also ending stock this crop year. Crude palm, another factor which have supported the sentiment is the CPO. Crude palm oil prices in the Malaysian market has jumped almost 16.3% since December 2020. If we talk of last week's performance, it has gained by 6.3%, owing to output concern caused by recent floods that have caused damages to the major plantations. Prices of soybeans have jumped about 15% since December 2021 and 5.3% this year so far. If we talk of soybean oil price on CBOT March future, it has also shown double-digit jump of 10% since December 15 last year, tracking the firm undertone of CBOT soybean and crude palm oil. Now coming to the factors which have driven the prices and likely to drive prices in the coming fortnight. Key factors are Brazil's soybean crop will be lower than last year. It could be lower by 11 to 13 million tons this year. With drought and heat in South Brazil, soybean crop from Brazil in current crop year would be somewhere close to 133.4 million tons, which is lower than last year's production of 138 million tons and estimate given by USDA in its December report of 144 million tons. Today, USDA will launch its January report in which they are likely to revise their South Brazil production on lower side. Second key factor is global ending stock is seen lower by 15 to 20 million metric tons in current crop year. South America dryness also impacting Argentina. Soybean yields are likely to reduce there as well, with prevailing extreme heat conditions, which will, along with Brazil's issue, lead to a drop in the global ending stocks between 15 to 20 million metric tons from last year. Argentine farmers are delaying some of their soybean planting work because of high temperature and scant rainfall in many areas. Well, domestic soybean arrivals in various mandis have dropped 27% last week. We will have a detailed discussion about this in the next slide. One of the denting factors could be the rising Omicron variant. Well, the spread of the Omicron variant of COVID-19 is the factor to watch for, especially for major consuming countries. As of now, it has not impacted the prices to most extent, but we need to have a check on a daily basis as it might dim the demand for short terms. Speaking of India soy meal exports, we believe soy meal exports from India is likely to remain weak in coming next to 3 months because of the higher prices. We have our arrival table. If we see this season's arrival so far, starting from 1st October 2021 to 7th January 2022, story seems to be like arrival this year is 11.7% higher than same period of last year. But if we tweak this data week on week basis, we have a different story. Arrival last week stood at 1,144 tons, which is 27% lower than arrivals of 1,36,819 tons reported same period last year. and week on week it is down by 4.25%. Previous week we had arrival of 1,04,596 tons, which is hinting that farmers are now holding stocks in expectations of higher prices in the future. On soybean CBOT March future prices, it had very muted month of October, November moving in a sideways range. But December turned to be a positive month, and since then we have seen galloping move. Even if we see the soybean oil CBOT price, it found stability around mid of December. Since then, it is moving up in a steeper way. Both the charts are suggesting likelihood of uptrend to continue, unless CBOT will closes below 13.20. Talking of soybean, and if we talk of soy oil, it will remain firm unless it will fall below 54 cents per bushel. If that is not happening, seaboard soybean and soybean oil are likely to stay firm and likely to move higher further from current market price. We just saw international soybean CBOT and soy oil CBOT prices. Now let's have a look on market centimeters developed by Origo eMandi research. Well, soybean CBOT, strong bullish condition, and as long as prices are not closing below $13, trend would be on higher side. It has gained 5.5% last week, and we believe prices to find support around 13.5 is a strong hope of testing 1430 and higher vicinity in the coming days. If we see soybean oil CBOT, it's also depicting the same story, gained by 4.1% last week, and it now has a trend reversal point of 50 cents. As long as prices are moving above it, we believe it could be on higher side and probably will test 60 and higher level in the days to come. We have recently seen catch-up rally coming in domestic soybean and soy oil prices too. And soybean in domestic market has also turned strong bullish, and we believe as long as it is not closing below 59.70, time and again we have said that as long as it is moving above 6,000 59.70, trend of this commodity will remain either sideways or higher side, and we have seen quite a good jump since then. This is the price chart of soybean India and soybean US. We have seen since mid of the December prices are perking up there and in domestic bourses too. See soy price chart of soybean oil, CBOT and India. Since last fortnight, we have seen strong rally in the seaboard soybean oil prices, and domestic market is also following the same. And if there would be the higher side movement in the seaboard prices, certainly we will have higher price move here too. Now coming to the seasonality. If we see Jan and Feb month seasonality of soybean seaboard and soybean Indore, Jan and Feb are positive month. It means there is likely chance this year too Jan and Feb month will post a positive return. Typically, if we talk of soybean CBOT, it gives a return of 3.2% in Jan and 0.8% in Feb. If we talk of domestic market, 3.5% in Jan and 2.9% in Feb. If this assumption will go right, we will have a positive Feb and March month. If we talk of seasonality of soy oil, positive month, but not much of the price activities. So we can see similar kind of a movement in NFAB. We have a detailed disclaimer here. Whatever we have talked about, it's our view only, not any direct or indirect, any kind of recommendation. Hope you have liked this session and tune into our channel to get more insight on different set of commodities. Thank you very much. Have a nice day.